What's up? What's up? Good evening, friends. It's great to see you. It's great to have you joining me here tonight. It is, Tuesday, September 13th, 2022. I, of course, am Big Cheds. I'm a chart nerd. I like to follow price. I like to trade price. I don't really care what it is. It doesn't, to me, it's easier to just think of it as it's just numbers on a chart. I don't really take anything seriously. Kind of in the course of my career, that has helped me to kind of just look at the price and consider, just pretty much assume everything is a scam. Trade momentum, trade support and resistance. Folks, let me know if I can hear you. Please let me know if you can hear me actually. In the chat room, I'm reading the chat room. I'd like to hear where you're from. Let me know where you're joining me from. This is a worldwide thing. Many of you are staying awake here in Europe and other parts of the world, so it's great to hear you. We see just a few of these coming in here. Greetings from Brazil. It's great to hear you. Thank you so much. I'm just getting my mic in position. Michigan as well. London, shout out from the UK, from Daytona, Florida, Nigeria, Argentina. Here we go, folks. So this is what we do. It's kind of a worldwide thing. So anyway, just honestly, thank you. Thanks for hanging out. Let's get this party started. So I'm Big Cheds. You find me on Twitter. I'm the author of Trading Wisdom, 50 Lessons Every Trader Should Know. There's 4 formats. You can get the book for free on my YouTube. There's a playlist. This is YouTube Cheds Trading. Tons of free alpha. Check out the Trading Wisdom 50 Lessons playlist. Something that's really cool and I think is underutilized is Twitter Spaces. So I've been hosting a lot of conversations. I have, 13 videos already. These are like an hour and a half, 2 hour long. Ask me anything segments. If you're a new trader, if you're brand new to trading, you gotta listen to this. Hi Chads, India, Portugal, Germany, Argentina, Texas, North Carolina, California, Vermont. Fantastic. I love it. Arizona. Thank you so much. These are awesome conversations. It's just me talking. Like I am talking to you now. People asking me questions. We're just kind of, chewing the fat, shooting the shit, however you want to put it. And they're fun. They're great. I learn a lot. I think they're constructive. So check these out. Check out the Twitter Spaces. Check out the rest of the playlists. Of course, I'm a founding analyst at Bitcoin Live. It is the best in class. It's the best. It's just the best. World-class team. I've been doing videos there, market updates for 4 years. I mean, there's nothing like it. And it's ridiculously cheap if you ask me. Anyway, in terms of it's just a really great value. I'm really proud of that. So what I want to do tonight, I have all these tabs open. These are tweets that I want to point to, and I want to kind of walk us through Bitcoin Daily Chart. I want to kind of walk us through the last few weeks of price action. I've been changing my studio. I've been traveling. I've been doing stuff. I haven't really done a video update. I've been live streaming these Twitter Spaces, and some people are like, what's this? These are awesome. This is ridiculous free alpha. So don't take this seriously. This is unbelievable. These should have tons of views. It's only like 1,000 views each. That's ridiculous. You people are lazy. That's some great value. But I haven't done these videos in a while where I essentially explain tweets. I want to kind of catch up on what Bitcoin's doing. Last time I did a video, quick market update was, let's see, the most recent one is going to be at the bottom, and this will scroll. That'd be great. What do we got? 913. That's in top. I guess I was watching some. This is my court. Top 5 moments. That's what I was watching. Somehow that got into that playlist, but I'll deal with that later. It was about a month ago. It was on 8/11. So let's take a look at 8/11. We're back here. Boom, right around the top. And what were we talking about here? We were talking about the rising wedge. And what I try to do is I try to make it plain speak as much as possible. When people are listening, especially on YouTube, I don't know what your experience level is. So I'll try to make it as much plain speak. But we had essentially the price bouncing, resistance, support, and then we got into this kind of pattern here. And this is all the backdrop for this was that Ethereum, hello from Italy. Great to see you, Florida. Thank you so much. Hey, thank you. The Twitter Spaces are great. Thank you, Can. This is like, pre-merge hype on Bitcoin, and I think Bitcoin really propped up, Ethereum really propped up Bitcoin, kind of with the hype. What was going on at this time is we were observing this bearish divergence, the higher highs in price, lower highs in the on-balance volume. That's incredibly problematic. So my last update was August 11th, right before we topped off, but I was looking for a topping here somewhere. Um, August 11th, we had that gravestone doji. So let's do this. What I have here is I have two views. I kind of have this marked up from just like Bitcoin Live videos, and just kind of I have that ready to go, kind of levels marked out. What I want to do is take the first tweet. So, and by the way, I forgot to mention my third book is coming out later this year, Trading Quotes. I think it's a great cover. The artist is World of Rusty. It's cool. Like you can see the different years, like you're learning your lessons. There's quotes on the postcards. There's like journey of travel, trading journal to chart. It's awesome cover. The book's really cool. I'm really proud of it. I work on it every day. If I every day I do a little bit, no matter what, I work on it every day, and I'll be ready for you soon. So book 3, right? Christmas release probably. So here we go. So what do we say here? So BTC, clean off the daily 8. That's the EMA 8. We've talked about it. Exponential moving average, more sensitive to short-term price movement. And a strong close with 40 minutes to go. Note the price still stands in the shadow of the gravestone doji. That's interesting. All right, so let's talk about that. So what I'll do is I'll copy it. I'm going to go over here, boom, and see what we're talking about right here. So this is a day after the doji, and it's a before the close. And I'm basically remarking, because I had remarked, hey, we have a gravestone doji, and then so a follow up to that is, wow, nice response up into that, but it's in the shadow of the doji. And so you think about Japanese candlestick signals, the best entries come on the retest of the range. So if this is a short candle, you don't really want to short here. You want to short, kind of bounces up and retest the middle to the upper part of the doji, and hopefully continues down under kind of an easy to trade, type of scenario. So that's the kind of the general idea of how you want to approach a Japanese candlestick reversal signal. Same would be true in reverse. If this was, flipped upside down, it was a dragonfly doji, right here. And normally you'd be looking not to buy up here. You're looking for to kind of come back and retest it, maybe even, double bottom. So going back, and we'll just get rid of that. So we're talking about the following day. So what did I say? I said, and I like to explain my tweets because people say, oh, you're too vague. I can't, like, every tweet can't be a textbook. Like at some point, you have to either want to learn. So clean off the daily 8. What does that mean? Well, it bounced. Here we go. Right off the daily EMA 8. Boom. Right off the 8. Okay. Clean off the daily 8. Should note the prices. This is I'm trying to say, like, temper your expectations. We're still in the shadow of the doji. We're still trading within the range of a reversal candle. So you really want to be careful, at least until we break that candle. And I say here, candlestick theory teaches us the best entries come from the retest. And then I have a couple of pictures. Here's the gravestone, the gravestone doji, yada, yada, yada. Okay. Let's go next tweet. So this is where I'm like, okay, this is ridiculous. I said, I don't think I've ever seen this. We have triple negative divergence, regular, meaning reversal divergence, as opposed to, hidden divergence, which is a continuation divergence. So here, triple divergence, where we had the higher high, another higher high, another higher high, lower high, lower high, lower high, and it's on balance volume. You can trust it way more than RSI, which is, in my opinion, overused, misused. It's also, not an opinion. It is a bounded oscillator. It has a fixed limit. That's why you get false divergence often. You gotta wait for at least like the second divergence with RSI. So anyway, I'm pointing out here. Look, I've never seen this before. This is ridiculous. We have triple negative divergence right here. I said not a healthy look. All right, and I started looking for shorts here for sure. I basically said to myself, I can't ignore this. I mean, it's going to top off here. I've never seen triple negative divergence. Usually double negative is like 80%. I mean, this is triple is ridiculous. That was here in the 13th. And what was interesting, if you look back, what happened afterwards. Let's see. Boom. What happened afterwards? We had an outside bar the following day, which is a reversal candle signal. And then we had another outside bar, double outside. So this is a very, very academically, it's very interesting. These 5 candles, both, candlestick and classical charting, Western and Eastern TA, right? Outside bars, that's not candlestick theory, right? That's classical charting. But in the gravestone doji, and then you have the up thrust. It's just very, very interesting 5-candle combination for someone like me who kind of, watches these things. You can call it reading the tea leaves. So there it is. There it is, right? There's this tweet. I've never seen this before, and I said it's not a healthy look. And it's basically like this is not good. And of course, a lot of skepticism, and I get it, not to be ignored, whatever. Okay, so let's move on. Not to kind of pat myself on the back, but it's fun when you kind of something that obvious plays out. And then here we go, August 14th. So what am I saying here, Chad? What does this mean? I'll explain it to you right now. Boom, day after. All right, I can read it easier. I'll just read it in here. Maybe I'll show you. Easier to read it here. Now an outside bar. This is like okay, pay attention. This is really not good. Like we just confirmed the fact that it's not good, right? At this point. Okay. Outside bar after and advance. It's really important because every signal is context. If it's an outside bar, okay, rock, paper, scissors. What's an outside bar? It's the piece of paper wrapping around the stone, and the stone is the moving up. The outside bar envelops it. It's squashing that momentum, often leading to a reversal. And it doesn't, an outside bar, if it's just sideways, who cares? It's a chop range, but a move up into boom, an outside bar, right? That's an outside bar after an advance. So this is context. I'm giving you context. Here's more context. You could also confluence, combining upper Bollinger Band, which is where you want to see a reversal signal. Okay. So that's unbelievable. I mean, that's why I said it's such a really interesting set of candles. I mean, look at this. I mean, this is ridiculous. You should see this in a textbook. I mean, you could write about this forever. The gravestone doji, the up thrust, the outside bar. You're like, okay, like this is a really, you see this and you're a bull. You have to be taking profit, moving your stop loss up. You're in, like, this uptrend is in major danger when you see these signals. November, and typo, thanks Twitter, I can't edit. November Earth. What's November Earth, Cheds? It's November 10th. November 10th candle shown for comparison. I showed you what we had when we topped off at 69K. We had the outside bar after an advance with an up thrust. This candle broke up above the prior high, created the outside bar. So I'm basically showing you here, like, this doesn't look good. Here's a comparison. Be careful. Ched, you're a perma bear, but this is like a big spot, right? That was a big spot. All right, what do we have next? We have 2x outside. I mean, I don't know if I need to show you on the chart. It was the next day. It was immediately the next day. We had another outside bar, which is ridiculous. I'll show you on the chart anyway. I mean, this is ridiculous. 2x outside. So this after we had another outside bar. So outside bar, outside bar. I mean, that's ridiculous. Triple negative divergence. This is up thrust, outside bar, and then outside down. We're starting to breaks below the range, looking to close below the prior close, looking like it's confirming these signals we've been looking at for the last 3 days. So like this, like the top was tattooed. This local top was tattooed with signals. I mean, there was no way to say you can't say that you couldn't see it coming. I mean, there was paying attention off this doji. You're really paying attention. You're watching the price retest the range. Then you get the up thrust. Then you get the outside bar and the double outside. I mean, it was ridiculous. And the divergence. I mean, so it was a very you usually don't get this well defined top of channel. Okay. Let's see. Next up. 2x outside down. Here we go. And here we go. Follow through. And you see the rising wedge illustrated. Now I've drawn for you. Here's what I've done. Let's copy the tweet. What I've done is said early fall through on those outside bars. And I've said at upper BB after an advance, the context and context. Wrote the word context. So I was trying to really try to be educational, not all the time. I don't always give as much as I can every tweet because I can't do it all the time. I get burned out. Okay. But here's a tweet where I'm basically trying to like teach you something. I'm teaching you about context. Here's the context. Early follow through on the outside bars, and we're breaking this rising wedge. But what did I do though? And if you click in the image, what does this mean? Right? HL, 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 high or low. I'm showing you the progression I'm showing you I'm putting the keyboard down because I can talk about this for a second. I'm showing you the progression of higher lows. You need to stair step to build a trend, in Japanese candlestick theory, rising three valleys. But just it's a stair step where you create a resistance, you break up above it, it becomes support. You break up above it again, that becomes support. And along the way, you have a higher low structure. So bulls need to defend these higher lows because the loss of the higher low structure shows a loss of momentum. It's evidence of a weakening trend. And your job as a technician is to ride the trend, watch for signs of weakening. That's why we watch for higher lows, higher highs. We look for deviations over prior defined resistance levels that are broken and then lost. So I'm saying, yes, we've broken down already. You need to start watching these higher lows. That's what that is. And this one right here, this last higher low is the most important level in the chart right now still. We dealt with it today. Much of the rest of these tweets talk about this level HL, higher low. It was the top of this move, right at 22.5. That was the higher low. And what was interesting about this move, I don't have the tweet here, but I talked about it a lot in Bitcoin Live videos, where you noticed the change in the texture, right, of this consolidation range right here in August. Let me show you on the chart. A little more interactive. You noticed right here. So you noticed that the texture of the consolidation had changed because from all these prior higher lows, we had to move to the upper Bollinger Band. Higher low, move to the upper Bollinger Band. Higher low, move to the upper Bollinger Band. Higher low, okay, and we immediately went into a lower time frame equilibrium or a tightening range of consolidation. And that point, we noticed that the structure of this range had changed. That was an even earlier sign than the gravestone doji, right? So you started to notice, you can look at these things, you can understand that's a loss of momentum. Yes, bulls did eventually win that tightening pattern, but they were forced into it. I mean, these prior ranges, you didn't do that. Boom, 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 higher low. We go back, higher low, and then here's the last higher low, and that's the level you're watching. That's when the price structure changed. 22.5. This low here, a lot of people use this low. That was not important. I think that's a mistake. That was just kind of a lonely candle. You wouldn't use that candle wick. You've got much more confluence right here, obviously. Taking that low, you take this, long like doji, boom. So it's kind of obvious this is the level to watch, not right up here, right? Whatever that was, like 22.7. This was the level to watch, right? 22.5, 22.6 right there. So there you go. What do we have next? For study, it's worth observing. This is very interesting as well. So I pointed out, in this consolidation range, outside bars have played a key role in this corrective. It's a corrective channel. What is a corrective channel? This is correction. It's a correction after a move down, right? This is a corrective channel. That's a corrective channel. This went a little bit longer. It's a much stronger relief rally than we saw here. Move down, corrective channel, move down, corrective channel. And we're still morphing into a larger range. We can talk about that later, but this is the corrective channel. And in this corrective channel, the outside bars. So we talked about a moment ago. By the way, if this stuff is confusing, you need to go to my YouTube playlist and watch the tutorials, masterclass. These are ridiculous videos like that. You won't believe how much you'll learn. I lay it all out. You got to watch these. I did these to make it easier, so I don't have to keep answering every question over and over again on Twitter. Like this will teach you 90% of your questions to be answered in there. So take a deep breath. Outside bars, right? We noted here, boom, outside bar after decline at the lower Bollinger Band. It's the opposite of what we had just observed here. If you look at it this way, it's an outside bar at the upper Bollinger Band after an advance, right? Which is exactly what we had up here, the signal I talked about a moment ago. Higher low, boom. What do we have? Another outside bar at the lower Bollinger Band after an advance. So I'm remarking here, for study. I'm remarking here that's interesting. And I'm also kind of pointing out, like we probably still have some downside left in the tank, given the kind of strength of those signals. These outside bars led to pretty strong moves. And at a minimal at this point, it's 23.2. At that point, it was like 80, 90%. You're going to go to at least 22.5. I mean, you knew you were going to test 22.5 based on momentum, right? Once you topped off, you have to test the higher low. bullish ones at lower, bearish upper bubble, both after strong move into. So that's what I'm pointing out to outside bars. I'm always paying attention to outside bars, but you can't overinterpret them. It needs to be kind of the right context, right? That's incredibly important. Just checking in the chat room. Everybody's doing well. I tried telling you, it's all about alpha, brother. I can confirm, extremely educational. I appreciate that. And thank you so much. Hey, I appreciate that. I try to put out value. I can't do this all the time. There's some great YouTubers who come on every day. They make funny faces and they tell you what you want to hear. I can't just do this every day. Like, I have my life, and I give it all I got to Bitcoin Live twice a week. So I can't be doing this all the time either. So thank you though. I appreciate the feedback. So here we are. Focus on, and basically I'm building up, hopefully you're understanding as I'm going through these slides, this lecture, kind of digesting or dissecting the last few weeks of price action, kind of building up to that higher low I've been talking about. Boom. Now I'm drawing it for you. What have I been talking about in the last few tweets? And I say here as well, continue to focus. Boom. Let's see, right there. Having a little bit, boom. And that's right here somewhere in this candle. It's actually before we broke down, because you see we actually broke down later in that day. So this is before we broke down. During that candle, I'm telling you, this is as the price is dropping. I could go on the 1 hour and show you, but that's not the point. You can see it in the image, right? We hadn't broken down yet. We're at 22.8. I'm basically saying, watch this level, right? We got the daily MA50 here. Did I mention that? Yeah, boom. Daily MA50 confluence. Confluence means in addition, or combining together. Like you want a bearish signal at with multiple data points strengthening that signal. It's bumping up into the a key resistance, moving average resistance, and a horizontal level, for example, something like that. Upper Bollinger Band is a big one, for candlestick theory. So, and then lower Bollinger Band and July 8th high, well-defined level. This is like, pay attention. I don't really do this thing a lot. It's kind of pretentious. But this is like, pay attention. I'm trying to teach you something, right? And this is what it is. Loss of higher low would suggest range low retest. This is at 22.8 at this point. I'm saying if we lose this level, we're going to like 17, 18, 5, 19K. That's range lows. This is range lows on the daily. It's not literally nut low, but these range lows. Losing this level right here suggests we're probably going down there. That's what it says. That's what I'm saying. And it's exactly what happened, because it's momentum. It's understanding what the price is telling you. The price is telling you this level needs to hold. It's the higher low. We identified all along the way the higher low. We talked about it. Okay. Got a bunch of these to go. Let's try to punch through these before this. It's already been 24 minutes. So, all right. Logical spot. Now, here's what's interesting. I'm basically saying, okay, we broke through, but I'm, and we're way below the lower Bollinger. I think we should probably bounce here at least a little bit. And what I'm thinking is bounce, and now you look for an underside retest. Now that we've broken the higher low, you have to immediately switch in your mind and understand that if we bounce, I want to fade that move. I want to short any bounce up to that level. And if it breaks it, then I can go long, because then it recaptured that level, and that move below. You literally nailed the 18 level swing entry as well. Thank you. I appreciate that. Yeah, I mean, it just made sense. It just made sense intuitively. You're looking for a bounce into the underside now of broken support. Okay. And so let's look at what happened there. I'm basically saying, though, it's a logical spot to pause, because trends will pause and consolidate. Yes, we've broken down, but I'm saying, well, maybe we can bounce. And it should bounce, but I think it didn't have that strong a bounce. So this is right here. Where was the price? What did I say? We were right at 21.4. So we were right up here. So I was right in this range. It actually went lower. I mean, I'm not perfect. I'm basically saying we should probably bounce here, and we had a bounce, but it was weak. I mean, look at this bounce, only up to 21.8. I don't think I found the tweet. I should have, darn, yeah, I should have found it, because I basically said, it looks like it's not even strong enough to bounce up and do a pullback, which is an underside retest right, of the broken support level, right? I'm like, man, this is weak. It's not even strong enough to do that. That was a really bad sign. I mean, you observe that. That's your job as a chart technician. That was another big clue. I mean, you're not ignoring that, okay? Um, you shouldn't be ignoring that, right? So couldn't even make it all the way back up there. But I was saying that we should probably bounce and retest this. Because it still was decent strength. I mean, to go from 17.5 to 25, K, that's some strength. That's a pretty solid relief rally. So I was expecting it to find support here at the kind of top of this ascending triangle it had broken out of. And it did, but it was just such a weak bounce. And that was interesting. And then EMA 8. It's people always ask me, Cheds, why do you use EMA 8? It's like I don't use it, the price does. Like I just respond to the price. And here we are in the daily chart, and lo and behold, we have a very vanilla, very ABC, kind of a trading 101 type of lower Bollinger, boom, to EMA 8 type of a relief rally. And oftentimes you'll do that and kind of continue down. Wow, Jason, thank you so much. That's unbelievable, Jason. Hey, thank you, man. You folks make this possible. I love doing this. Thank you for that feedback. Wow, that's but EMA 8, right? EMA 8 is primary resistance or it's primary support, right? That's that first level. So I flip it upside down, and this is a breakout, right? On the retracement, you're looking to buy at EMA 8. Always. It's incredibly strong. If you look at the Bitcoin moves, the big move up to 64K, most of the moves at the beginning stages of acceleration, the minor retracements will bounce off the 8. You always watch the 8. And look at this. Look at the EMA 8, how sticky it was. The price couldn't break, couldn't close above it. Rejected, 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 rejected. I mean, that's ridiculous. Uh, you're the man, brother. That's ridiculous. Look at that. EMA 8, right? So, before we even test it for the first time in this range, you're thinking, okay, EMA 8, I'm going to start to, look to take long profit and longs, move my stop loss up, that type of thing. EMA 8 must be respected. It's not that I use it, the price does. And that's the point. Boom, EMA 8. I'm drawing here for you. We have initial rejection and up thrust. We have a volatility candle, the long leg doji. It's a pretty weak look. This is not a good look right here, right? This kind of 5-6 candles is not a good look at that point. And here we go. All right, what happened here? This is a couple days later, and this is me just kind of milking this good call. I'm human. I'll milk my good calls. And basically saying, OBV bear divergence, thank you. So I quoted back to the call where I said not a healthy look. I mean, I'm human. I get it. It's fun. It's fun to, I'm human. We'll leave it at that. So here we go. And I'm basically saying, look, we are now sweeping below range lows. It looks like that happened here. And boom, we had just broke the local lows. So this is after, and it's just fun when technical analysis works because we spotted this top happening like in real time. We followed the signals, we saw it break down, we understood where to fade the mean reversion, and then we watched it break the range lows. And so it's like we're in control. You can feel in control because you're following the trend, you're trading with the trend, and it makes sense. Wow, thank you. I don't know what DOP is, but sweet. Thank you, Tencredo. You folks don't have to do that. But it's nice. It's a nice way to show it. Just showing up is great. Like showing up and talking in the comments and sharing the videos. And when I do spaces, I wish more people would ask questions. I love talking to people, especially if I've never talked to them before. It helps me learn. It helps me learn how to teach. It helps me. I can learn something from everyone, and it's great for sentiment. So just obviously, thank you for everything. This is just like a big love type of show. Thanks for my teacher. Thank you. Thank you. I think you'll like the third book. I'm really proud of book 3. So thank you so much. So look, the price uses EMA 8. And then we're breaking range lows. So it's nice to kind of follow the trend. You can kind of feel in control at this point. And in this point, you still have right above you 20, this level to watch, 22.5. So you kind of understand you're now consolidating below this big level. And even though we've just broken down at this point, you still also know, hey, I'm still long back up above 22.5. Okay. Boom, boom, boom. EMA 8. below level, and then here we go. What's the next one? And another day, another EMA 8. Another day. Let's see. Let's clear it up. And that's not what I wanted to do. Let's go there. Let's go there. Let's go there. Another day, another EMA 8. So that's, I mean, look at that. I mean, it's ridiculous. Why do you use EMA 8? Like, I don't use it. It's the price. I was looking at the price. It rejected, breakdown, and then another bounce, EMA 8. Like, what are we talking about? Is this the magic? Is it magic? No, I mean, it's just an exponential moving average. It's more sensitive to short-term price movement, and it works. You watch it. You're trading Bitcoin, pretty much everything, but especially Bitcoin, right? And then I basically said in the next video, another day, I basically said, if you're trading this and not watching the daily EMA 8, you are literally asleep at the wheel. There's no excuses. Look at this thing. It was unbelievable. This is a couple days later. Yeah, I remember getting fired up about this, where I was like, I can't how can you not be? It's just watch the 8. Look at the price is telling you. Your job, you need to listen to the price. Like, don't pick your own moving averages. Have the same moving average for every chart you look at. And then when the price tells you to pay attention to one of them, do it. EMA 8 works. Don't use all of them. Use the 8, fine, or use the 12. You can do 1226. I use 834. I don't use the 26 because I'm using the middle Bollinger, the MA20, the simple. You know, and by the way, again, all this stuff is just in this playlist. Go to the tutorial masterclass. I explain all the moving averages. Right? Again, if you get confused about anything I'm saying. So it's like, hey, pay attention, use the EMA 8. And so this is really interesting. Some of you may remember this. This is when we started to form this descending triangle. So this is a little bit later, and this is after kind of all these at these further rejections, and you're kind of observing that the price is dropping. And remember, I don't know if you guys remember, guys and gals, folks, remember, every time it dropped down here, we found buyers. Right? We started to find buyers every time it dropped down here. If you go to the 4-hour chart, it was a little bit better illustrated. We had a descending triangle. Descending triangle with a flat base of support. You kind of actually draw it this way. There you go. Oh, Cheds, how can you ignore this? You're not ignoring it. It's captured in the trend, right? There's no line. There is only a trend. So you understand a trend line is about identifying a trend, not identifying a line. And this is just a little bit of move above the line, but it's basically still price action captured within this trend line. And you more or less have a falling level of supply. That means more anxious sellers, right? A descending hypotenuse, right? A right angle triangle, descending hypotenuse with a flat base of support, right? Look at that. What's your measure move? Height of the triangle, boom, right down to basically 18.5, 18.6. It was, this whole move down from 25K was super textbook. I mean, it was ridiculous. And basically, what was interesting though is you're watching, either the EMA 8 is going to break because it's rejected, or this base of support is going to break. So you kind of know what to watch. You say one of these two things will give us a clue. Because you could bull break from here, and you could bounce up very easily and test, the top of this prior consolidation pattern. But you're going to watch those things too. This is an interesting tweet, and I want to talk about this. So, what is that, Chad? What's a W? It can still W. What does that mean? What does that mean? It can still W. 4-hour daily. It can still W. This is like right here at the bottom. It can still W, because what I'm telling you is, we can still double. It's a double bottom, but a double bottom. I'll show you what's not a double bottom. All right, da 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 da, boom, da 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 da, boom. Like, that's not a double bottom. That's two tests. That's two thrusts. That's just two tests in an area. A double bottom is when it comes up, breaks above the peak. This is the peak. This is the peak. This is the trough. You have time interval between the troughs. You have time interval between the peaks. It's valid in classical charting. Height, measured move, right? A, B, C. Very simple stuff. So you look at double bottoms, you have variations of a double bottom or a W. We talked about Adam and Eve. We don't have to do all this. But in this context, you're thinking about 3 types of Ws. You're thinking about the W with the higher low, which I think is not as ideal. because I think it's less likely to. It's counterintuitive because it actually, I mean, it suggests that there's more demand, but for my feeling, not my feeling, but just my experience, you need the. I'll get to the third type. So that's the first type, high or low. Then you have the second type, same low, right? Double bottom, pure. And then you have the lower low. And this is for Bitcoin, been the money, been the kind of the best one with a slightly lower low. You trigger all the stop losses and then you go. So we can still W. I'm saying we can still W, even though this thing looks terrible. Oh, Ched, you're getting bullish. No, I'm basically trying to add context. I'm always trying to add context because I'm thinking about consolidation within larger ranges, I kind of have a sense of, I've contextualized everything. It's as bad as it looks. It can still W. Lower low on the second thrust is ideal for stop loss, trigger, and bounce, is what I'm basically saying. The best case scenario, and that would help form a panic bottom, which we haven't had yet. We haven't had the lower low. We haven't had a panic bottom. The first low, if we come back and go to like 16.5 and break, we might be able to get enough panic. We wouldn't do it here, but it would have to be more like this, and it would have to, come back like that. You have to get it and basically get the lower low. If we get to like maybe 16.5, that's the W with the lower low. You got your breakout still 25, 25, 25K. You get a panic bottom because everyone's like, okay, that's it. It lost 17.5. It's going to 12. But if it goes to like 16 and quickly gets back up above 17.5, then you have a spring, right? Boom, boom, lost support. You come back above. Then you get a spring. So you get all this kind of the potential playable scenarios. You're always on watch for that. So I'm kind of looking at that. I'm thinking, what might make sense? Because I've been talking about 12 to 14K, since Bitcoin was around 40K. I mean, since March on Bitcoin Live, I've been talking about 12 to 14K, right? But I'm still open to the idea that we may not get there. And I want to know, like, what would be a scenario that would give a panic bottom, but also might get us there. So here we go. Boom, 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 boom. And there's basically I talked about the descending triangle, which I just talked about before. And this is just a tweet where me and basically say, hey, we're working on a descending triangle. It would invalidate around 20.5. So you want to kind of think about any pattern, not only where it confirms, but you want to think about when the pattern would be invalidated. Thank you. Appreciate that, brother. So you want to think about when thank you, best crypto content. I'm just being me. So it's when it confirms like a head and shoulder, right? When the right shoulder invalidates, or when it confirms neck baseline is broken. I'm pointing out the pattern to you. I gave you this little handy chart, what to look at, yada, yada, yada. And then boom, tags 18,675. So I'm saying that even though it did go a little bit lower, I think 18.5, I'm basically saying this is kind of played out. And you see right here, like this is kind of played out at this point. We've played out that move, which basically means you want to be on guard to start to look for a bounce. Back on Bitcoin Live, I don't know that I really talked about it on Twitter, but back on Bitcoin Live, when we lost 22.5, what's the daily chart? And back in Bitcoin Live, when we lost 22.5, boom, I started basically saying, we don't really have well-defined support, but I think we're going to go to at least 18.5. And it's essentially what we did. So it's kind of nice to see how that played out. Then you start to look for a bounce, you got your spring, boom, and then we'll get to what just happened. So descending triangle has played out. Now we have 5 tweets left. 6 years left. Here we go. Escalator up, elevator down. 60 days of price action wiped out in 23. Long grind up, and then boom, right back. Essentially here, 18.6. This is right back to range lows. It's played out. Like this is, you as Peter Brandt calls it, the popcorn trade. Popcorn's in the pan, bounces up, boom, comes right back down. This is the popcorn move, the round tripper. 60 days wiped out in 23. This is kind of a more, I'm giving you more strategy, right? So this was interesting. This is as Ethereum and Bitcoin were both bouncing again. So this is right. When was this? There we go. Oopsie. Let's go there. Let's kind of get a little bit more granular. So it's like, all right, I'm thinking bounce here a little bit. You can see I'm thinking bounce a little bit. But I'm basically saying, given the backdrop, right? I'd rather either short Bitcoin or long Ethereum, right? I don't want to long Bitcoin and I don't want to short Ethereum. Like I want to play both of these with their trends and their strength. There at this point had been relative strength in Ethereum to versus Bitcoin. So I'm basically saying, um, because they have a pivot, right? BTC at pivot, right? What is BTC pivot? What does that mean? 22.5. It's the pivot. Um, I'd rather fade BTC at pivot and then close it and flip long, and close that BTC short. So basically, this means like, let's say the BTC short fails, and it's a theoretical BTC long. I'm actually going to go long ETH instead at that point because it had relative strength, the way things have been trading. So it's one of those things where I'm only going to play each of those only one way. And I'm trying to explain it in that sense, rather than playing both ways, right? Because I'm trying to trade with the trend. And then here we go, BTC visual. I know I'm kind of glossing over this a little bit, but I hope that point makes sense. Where I'm still looking to fade this. I'm still thinking, if we bounce here, I'm still thinking that I'm looking to fade Bitcoin, right? Um, and I'm certainly looking to fade here, right? On the underside of the descending triangle, definitely. And you could have gone long there because it makes this a spring. But so I'd rather short Bitcoin here. But if Bitcoin breaks from here, and I'm thinking the whole market's going to rise, I'm then going to shift to long in Ethereum rather than long in Bitcoin because because Ethereum had a better bounce last time. It has relative strength, right? So you want to trade with the trend, is the point I'm making. And then BTC Visual, this is quoted in another tweet. And I basically said, and so I'm kind of setting kind of expectations, or I'm kind of talking about my philosophy, my strategy here. And nope, let's try that again. And thanks for being patient. 42 minutes, we're wrapping up. This is a very long one. This might even be like I might even put this in the masterclass webinars, but it doesn't, we'll see. Um, so at this point, we've bounced a bunch. We're right around 20.3, but I'm basically saying I'm trying to set expectations. This is really important, okay? And I'm quoting, and then visual. So I said the words, and I'm like, well, people don't know what I'm talking about. So I drew the visual. I basically said, here's the pivot. And I pointed out the arrows. This was the support, resistance, rejected, right? We talked about that triple divergence, outside bars. This was the initial resistance that was broken, failed to hold, morning doji star, bounced, came back, it did hold. And now it's a level we're watching it. That's the higher low. Higher low, higher low, higher low. That was the higher low. So on the way down for bulls, you could very easily, catch a bid here. It would be a very logical spot for the price to pivot and bounce. That's the pivot. But now that it failed, it's resistance. And so we need to set up these binary above and below levels where it's bullish or it's bearish because we're trying to structure our risk. We're trying to picture define levels. Ideally, the price is defining it and not us. But we need to rather identify levels that are momentum pivot levels. This is a momentum pivot level. And basically, I'm saying, even though we've had this ridiculous bounce, I mean, this candle was absurd. It was beautiful. This green candle was gorgeous. I wow, right? And it was after the after the spring, recaptured the low of the descending triangle, beautiful follow through, and you're thinking, wow, I'm ready to FOMO. But I'm preparing a short. I'm thinking about shorting up to around 22.5 because that's the pivot. We lost that level. You want to fade. And I'm basically saying, like let's keep it simple. From a trend following standpoint, you want to fade any move below 22.5 because it lost that. And that's the major pivot level. And I talked about the fact the initial bear target from the loss of the higher low has been met, right? So a mean reversion bounce here is only logical. What does this mean? Yeah, it makes sense for us to bounce here because the descending triangle played out. And we already dropped 25 to 18.5 off of the triple divergence and the outside bars. This is what I'm saying. It's saying, okay, yeah, like it's not a straight line down. This is basically saying we're probably going to pause here and the price will attempt to establish a W trough. That means a second low, right? The trough, the low of the W. Above 22.5, watch W peak. What does that mean? Oh, Chad, you're so cryptic. Really? I mean, basically saying like you're short, you're short below this level. But if you're above this level, we're watching the peak. Peak of the W. W, boom, 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 boom. Above here, we're thinking pay attention, probably go long, confirm, add on that break. Unknown texture or structure of this trough. Maybe get a lower low, maybe it's here. Unknown, but we're kind of on watch for some type of a W. All right. And that, boom, there, simple trend falling point, and then boom, here we go. All right, pay attention. This is what is that? 5 words with some numbers in there. I'm basically saying, because I know people have me on alert. And I'm not trying to abuse that. And this is one where you want to have me on alert because I'm saying, all right, this is it. I'm telling you, this is it, right? This is the key spot. We're basically right here. It's in this candle. Let's see where it was. Boom, right there, right at the top, because it's 22.5. That's the key level. And we went a little bit higher, but we topped off. And what's interesting, I actually got caught on a long here. I went long, and my stop loss, is like 22.3. So it was like a tiny loss. But I follow my own thinking, what I've said. I follow what I say to you. If I say above 22.5, watch the peak. I'm saying, okay, I'm thinking above 22.5. We're probably going 24.5, 25. So I took that trade. Right. It's trying to flip it, and it's flipping it. I'm long. It was like 22.6, 22.550. I took a long right here, but then I get stopped out. Right. And which is fine. I have no problem with that. And what that illustrates is the fact that that's a really bad sign. That's a momentum reversal. You have the key resistance. Boom, boom, boom. It did this, came back, it held it. You came back below and it looked like you were about to flip it again. Boom. Then it came back below. That's a deviation. That's an up thrust. That's a big momentum reversal signal you pay attention to. And then the follow through on it was just obscene. I mean, we had a ridiculous candle today. A pretty crazy standpoint. Let's see. W peak and trying to flip 22.5, and then this is back to really illustrating that level. So let's see, boom, 22.5. So that's how it played out. That was it. You got right up to the key level. That's why we watch these key levels, right? That's why we watch these key levels, and it's kind of been fun to watch, even though it's been a bit of a wild ride, from the rising wedge, the outside bars, the EMA 8 rejections, the descending triangle playing out, mean reversion rally, keeping in mind the 22.5K level, and then all this price action right here at 22.5, flipping it and then failing to hold it. So that is what I wanted to say. We're 48 minutes in. That was a lot of fun. Kind of talking through. Thank you. Appreciate that, Chef. That's hey, good to see you, my friend. I know you stay up late. Appreciate that. I appreciate that. And we're having fun. Thank you so much. This is Textbook Masterclass Content Faux Show. So listen, I could go on longer. I could talk about Ethereum. I could talk about these altcoins, but it's 50 minutes, and we'll leave it here. This has been an awesome show. I don't do these a lot because I am a founding analyst at Bitcoin Live. I'm doing twice a week a full market update there. I don't miss a video. I literally twice a week, you're going to hear from me whether you like it or not. I stop and I give a market update. I'm just one member on a team. It's a world-class team. If you're serious about learning how to trade, if you enjoyed this video tonight, it's more or less what I do. Answer all the questions from the wonderful members. I'm the author of Trading Wisdom, 50 lessons every trader should know. You can get it in 4 formats. It's narrated by me in the audiobook. So I would encourage you to check that out. You can get it for free on my YouTube. Check out the playlist. I think I'm going to do lesson 17 tomorrow. I've got 16 of the 50. I'm doing one lesson at a time. I'm going to try to do lesson 17 tomorrow to get that out. Let's see. And that's about it. So listen, let's remove that. Folks, I want to say thank you. I want to thank you for being patient with me. I haven't been doing these videos much lately. I've been kind of changing some things in my life, moving around, doing this and that. But I'm glad you joined tonight. It's been great to have you. And I hope that you'll stick around, check out some of these other videos, and we'll see you next time. So let's get this dancing going and slide off into the evening in style.